I think they're going to print early and print often. I think that we're not going to get sort of a 2008 style like massive credit event, but we're just going to continue print and print and print. And you're going to look up and see, Bitcoin at 250,000. Like, what happened? There wasn't really a financial crisis.
What's going on, guys? Today we got a great conversation with the philosopher king, Arthur Hayes. In this conversation, we're going to go deep into what's going on at the U.S. Treasury. Scott Bessent, he wants to print a bunch of money, or does he not? What's going on with Stanley Druckenmiller's op-ed? And was there maybe some agreement as to why this got published, when it got published? On top of that, we talk about Janet Yellen and what she did to destroy the U.S. economy and why politicians across both sides of the aisle, they just ain't ever going to stop printing money. And then what does it mean for your investment portfolio? Where could you put your capital to benefit from this? And where should you not put your capital where it may get destroyed? Arthur's got a lot of ideas about that. And then last but not least, Arthur's got a brand new project he's working on to tokenize, compute, and really think about what exactly is it being processed when you're using one of these AI models? How should we measure that? And how could you potentially make money without actually having to make an investment? It's very interesting ideas that got me thinking about a lot towards the end of the conversation. So here's my latest episode with Arthur Hayes. All right, Arthur. Scott Bessent, he wants to play games. He says that he is going to bring liquidity into the market. What's going to happen here?
As they always do, he's going to print the money, just like his predecessor, Bad Girl Yellen. Buffalo Bill Bessent's going to give us those Bessent bucks, and we can buy whatever we want to buy, whatever makes you happy. He's going to give it to you.
Now, what is he trying to accomplish here? Like, he tries to get these long-dated bond yields down. They kind of fall, and then they go right back. Now you got Druck writing op-eds in the Wall Street Journal, basically saying, like, slapping his hand and telling him to knock it off. What's going to happen? You think that he's going to actually execute on this, or was this more of an announcement and see if they can kind of talk the market down?
I mean, it's really strange because if you take a look at the actual upsize, it was like 20 billion over the scheduled amount, which is like irrelevant in terms of the size. And like, Bessent's not a fool, right? This is a guy who, in coordination with Druck and George Soros, manipulated the pound to force the Bank of England to cave. So I can't imagine that he thought that this was going to be the end of the game. But at the end of the day, if he's like telegraphing to folks like us, like, get ready, start buying shit because it's coming, then I think he's done exactly what he wants to do. And the Druck AI slop piece in the Wall Street Journal, I read it, and I think Citrini had an interesting tweet about like, Claude, make me a criticism of the Treasury Secretary. It's like, obviously Druck didn't write this whole thing; he put it in some sort of AI. But I don't know. I mean, one of my friends is like, yeah, Druck's been trying to make the fiscal situation in the U.S. a political issue for 20 years, and nobody gives a fuck. So I'm not exactly sure why this time is going to be any different. At the end of the day, we need to listen to the politicians, just like we listened to Yellen. They're going to print the money. 5% is the level. They will not allow it to go above that, and we should trade accordingly.
Now, let's talk about the op-ed, because I think there's two components. First of all, usually this is a private phone call, right? If you are Druck and you disagree with what the Treasury Secretary is doing, you got a cell phone number, you give him a call, say, hey, what the hell's going on? Writing the op-ed, just the act of actually having it published publicly, is that to rally public support? Is that to call kind of attention? Is that like Druck preparing because he wants to be president next? Why is he putting it out publicly, you think?
I think the best theory that I have heard is that Bessent would love it if the pressure was taken off of him, right? Because at the end of the day, he's been very vocally criticizing Janet Yellen and a lot of other people who had his job about the why they are issuing all this short-end debt, is creating all these rollover issues, and all sorts of things. And then he does the same thing, if not in bigger size, when he gets into the job, right? Because there's only one way to do this. His boss, the president, wants to print money to do stuff, and he's got to do his job, which is find a way to pay for it in an affordable manner, which means all these things, these technical things that they do in the markets to make sure that the markets are well functioning. So it would be great if they stopped spending as much money. And so I think that there's one theory that Druck probably did give Bessent a call, and he was like, great, yeah, the more pressure that we can put on the domestic politicians, both Republican and Democrat, to say enough is enough, let's stop spending so much money, that just makes my job better. It makes me look better, right? Because Bessent, to anyone who's in finance, looks like a fool. Like, you literally 18 months ago were telling us how Janet Yellen is the biggest idiot around, and you're doing exactly the same things that she did, if not in bigger size. So his professional credibility has been destroyed by the fact that his boss wants to print a bunch of money, and if he wants to stay the Treasury Secretary, he needs to find a way to pay for it.
It's an interesting thought that maybe actually he like initiated or encouraged Druck to publish the op-eds. He's like, go out there in public and yell at me. That's actually going to help me. That'll make me
Yeah.
look better. Now, when we think about the AI slop, on one hand, I've seen people be like, dude, what the hell? Why is Druck using AI to write the op-ed? On the other hand, there's people who are talking about like, look, a lot of famous people, they have speechwriters and we don't, question them and say, oh, somebody else wrote these words, you're saying them. It's kind of like they came out of your mouth, you believe them. So, that's okay. Is that where AI's gotten now? And we shouldn't really read into the fact that it's AI or not. It's just like, look, Druck put his name on this. And so these are his thoughts, whether he actually wrote them down initially or not.
I guess it depends on whether you think you're an artist or not as a writer. Obviously, I write a lot. I'm sure you do as well. Like I consider it an art form. I enjoy the process of writing and the struggle that comes along with that. And yes, I use AI to do a lot of research, but I don't use AI to write the stuff that I do because, again, I do this as pleasure for my own sake. If you're literally just got a call from Besson and he said, write something in the Wall Street Journal to help me out, Druck. And he's like, okay, cool. I'm on vacation fly with my family. Claude, make some shit up, right? And I'll sign my name because it says what I was going to say anyways, but maybe not the same sort of prose. Cool, whatever. And if the Wall Street Journal is happy, but that is going to be the type of prose that they are going to publish as a leading newspaper, then that's their policy. And, we'll see what the readers think in terms of how they view the art form of writing in terms of whether they want a human to write it, or it's great that Druckenmiller signed his name. And that's the signal that people care about whether or not it was written by a human.
It's funny. If you ever listen to his interviews, he's an incredible communicator. He's got kind of his own style. If you've ever read any of his past writing, you almost immediately are like, dude, he didn't write this. And so like, I kind of feel like we were robbed of the like tongue lashing he could do if he had taken the time to write it. It's almost like the AI was like too kind and, white gloved, where Druck could just, he could slash you if he had taken the time.
Yeah. But again, it's question of time and what his real motivation was. So maybe it was just like, hey, let me just help out my boy and try to take some pressure off him and put this where it should be, which is on the politicians who keep spending the money.
That makes sense. Now let's talk about Bitcoin and gold. Obviously, are two of many assets that are responding to this. Bitcoin jumped. I think we were at like $63,000. We're now over 80,000 within a couple of days. Obviously, the market heard Besant, and if that was the goal, then kind of success there. Do you think that the response is going to be sustained across Bitcoin and gold, or do you think that there's still the chance that this is kind of a short term pump and we could see the lows again?
I think the only way this is a short-term pump is if you believe that Druckenmiller got through to Republicans and Democratic Congress people and senators who are running for re-election and like, okay, I'm no longer to offer free shit to my voters to re-elect me. Now, if you believe that, then this move in Bitcoin and gold might be overdone and we're going to go back down again. But if you believe that politicians want to offer free shit to their constituents to get reelected, then this is only getting started because the buyback didn't solve the problem. It just put a spotlight on it. And now they actually have to do something to get these yields down. Because I don't know what the 10 years at now, like 470 something. Hasn't really done much. 30 years still at 5.25 or a little bit above. So again, they've done absolutely nothing. And so now it's time to actually start printing some real money.
What's funny is I saw Lulu Mesveri, who is one of the top communication experts. She was like, "Look, the one thing that Mamdani understands better than almost any politician in New York or in the world is just give people stuff." And so he's like giving away free bike helmets. He's giving away like World Cup tickets. Like, I mean, it's literally like it's like a school fair or something. Just he's just handing out shit. By the way, the government's losing money on every single one of these things. They're like buying market rate, World Cup tickets and then just giving them away at discounts. But in a weird way, the Republicans or, kind of the national politicians are no different. They may not be giving away bike helmets or World Cup tickets, but they're giving away a hell of a lot of money in, all kinds of different exotic forms, right?
Yeah, exactly. What is money printing? But it's a giveaway to rich people, right? The things that went up in value are all financial assets. Who owns all the financial assets? Top 10% of income earners in the US owns something like 90% of the market. So like, it's basically just socialism for rich people. And then the response is, okay, well, we'll do socialism for poor people. And at the end of the day, you keep printing money and nothing actually changes, right? So the US is one of the most unequal places in the world. I think it even has a higher Gini coefficient than China, which is, a very unequal place as well. So it just fosters more income inequality. It fosters more discontent amongst people who see the fact that they just cannot get ahead. Doesn't matter if you're a Republican or Democrat. If you're not one of those 10%, you're fucked. And so then it just comes down to who you believe is going to give you more free shit.
So I kind of think of there's three assets that really protect you from the money printing. There is Bitcoin, gold, and land. Seem to be the three that I think most people would rely on. I never really hear you talk about real estate, land, timber type resources, etc. Have you ever spent any time on that stuff?
Not really. The problem that I have with land and real estate is the transaction costs are very high and it's very local, right? Like obviously, if you live in a particular place and you understand the location, yeah, buying land or something might make a lot of sense, but it's very illiquid. Even in some of the most liquid property markets in the world, let's take the US, you're paying something like 6% transaction fees just to your realtor, just to sell a place. And then it has to be on the market. You have to advertise it and all these things, right? Or you could just own, gold, Bitcoin, maybe some inflation protecting stocks. And when you want to sell it, it's like a few minutes and you're done. So I think obviously there's an emotional attachment to real estate. And once you have enough financial assets other than real estate, it makes sense to own these things. But I think people put a little bit too much emphasis on, oh yeah, I've got to own property. But like, look at how difficult it is when you need to sell that piece of property to actually do it and then, invest accordingly.
I'm thinking more like investment assets. That there's obviously publicly traded like land holding companies and things like that. And the reason I'm starting to think about this is it does feel like the portfolios that are insulated from the money printing are going to do better than the people who are buying these productive, assets, especially if you look in AI. I mean, how many companies have we seen go from zero to a lot to all of a sudden it's like, wait a minute, they may not have the business we thought they had. And it's becoming very difficult to predict the next, 10, 15, 20 years of economic return on the investments these companies are making, because frankly, I don't think people can predict where this is going to be in 12 or 24 months. And so it's almost like I remember Warren Buffett used to say, like, he bets on things that don't change. Yeah. That was like his whole thing. It feels like we're kind of almost headed back there, but now from a asset allocation that is really, really focused on just like let the money printer run, and I'll hold these things. They're not going to get disrupted, and that's how I'm going to make my money.
Yeah, but again, yeah, I guess when you get into the real estate and land, there's a lot of local politics involved, right? So like, what are the zoning? Like, obviously, the U.S. has a lot better property protection than a lot of other places in the world, but you could have massive property taxes as a way to solve this issue of inequality because you can't move the property. You can move the other assets, right? You can move financial assets around the world pretty quickly, speed of a click of a button, but you can't move land. So the first thing that you're going to do is you're going to tax property because it's the easiest way to get rich people because they can't move the money. So I think that's one problem with owning, land or real estate as this inflation hedge is, when they come to tax things, this is the easiest thing to tax.
Let's talk more about Bitcoin specifically. Obviously, it's still down, 30, 40% from its all-time high. People are more excited today than they were, 2 weeks ago. But it is this weird dynamic where Bitcoin is, slightly above where it was in 2021, right? It hasn't really appreciated that much, even though it's had all the volatility and the new all-time high, et cetera. What's your kind of view as to Bitcoin as an asset, and maybe what should we expect over the next 12 months?
So I think that Bitcoin got the stick because AI took all the credit. The marginal dollar or yuan or euro or yen of liquidity went to AI. And, that's still happening to some extent, but now we've moved past that. But yeah, if you're talking about 2024, 25, people were just funding data centers and, equity investments in all these AI companies. And, Bitcoin was, the ugly stepchild. Oh, you're supposed to be this like money printing heads are printing all this money, but it's not going up. But Micron is up 50x. I guess I'll just do the AI thing. And so I think that's what really impacted Bitcoin. And obviously, 2025 was a massive year of increase in the amount of debt issued for the AI trade, and that definitely crowded out the markets. And obviously, we're seeing it in the government bond markets as well. AI debt is crowding out government bonds, and it definitely crowded out Bitcoin as well. So I think that's why. Even if you take a look at the 125,000-ish all-time high, it was barely 2x over the previous all-time high, which is, not spectacular in terms of a Bitcoin bull market versus the previous ones. And so now that we've down 50%, I think that we're going to enter the capital misallocation phase of AI. And I think people are starting to realize that there's going to be lots of money given to try to roll over debts to paper over the fake accounting that's going on. And that liquidity is going to find its way into Bitcoin because I think people recognize that, hey, maybe these AI companies don't earn their return on capital. Maybe these adjusted financial metrics are completely just lies. But because they're private companies and we don't really see, they get to say these things. Anthropic and OpenAI claiming that they're profitable. I don't know. I bet they're not. When you actually get the proper gap accounting metrics. So I think that as more and more liquidity is pushed in AI to basically prove that the politicians didn't make a massive fuck up by supporting this as government policy, that money is going to find its way into crypto. And so Bitcoin is going to do very, very well.
I have a tweet from, I don't know, 3 months ago where I said something to the effect of it's going to be glorious when the AI profits rotate back to Bitcoin. And people obviously were clowning me at the time. But I genuinely believe that people took a ton of the Bitcoin profits from the last cycle. They rotated it into AI. They've done well there. And at some point, they're like, wait a minute, I still need that scarce asset in a world of abundance. And when that stuff rotates back, it'll do very well for Bitcoin. Now, the question is, if we get a 50% drawdown in a bear market instead of 85, does that mean that the appreciation in the next bull market will also be muted?
I don't think so. I think that, and I've written about this, the AI bubble is the biggest CapEx bubble that we've ever done in human history. And so the eventual, and it would always happen because we're human, we're just optimistic entities, it's going to be huge, the amount of money that's going to have to be printed to save the system. Because if you think about it, every time you have one of these AI debt deals, at the end of the line is a pension fund. It's not very clear that that's happening, but that's what's happening with where all this credit is getting stuff. The riskiest stuff is going to end up on the people who can least afford to stomach these losses. And the politicians are just not going to allow that to happen. I'm not sure if we're going to get a sort of a Bear Lehman sort of setup where they let some firms fail. I don't think there's any appetite for that. I think they're going to move to print the money way sooner than that because they don't want to revisit it 2008 and actually have like a public reckoning of the complete retardedness of these politicians and how they supported this AI thing and misallocated this capital. So I think they're going to print early and print often, which is why we're already seeing Besson supporting, the Treasury at 4.75%. Like the U.S. economy is great. It needs a higher interest rate. There's no reason why, why 5% should be a problem. So I think that we're not going to get sort of a 2008 style, massive credit event, but we're just going to continue print. And you're going to look up and see, Bitcoin at 250,000. Like what happened? There wasn't really a financial crisis, but, the Fed in its own way is printing money. Scott Besson in his own way is printing money. The Japanese are doing it, the Chinese are doing it, the Europeans are doing it, all to sort of make sure that there's not this coordinated global credit event like we had in 2008.
Now, when we think about kind of the macro environment, Bitcoin seems to be adopted by the hardcore Bitcoiners. It seems to be adopted by some public companies, but still a pretty small percentage. And there is a couple of data points of sovereign wealth funds buying like the Bitcoin ETF and their sovereign wealth funds. Nation states, for the most part, still are not participating. And we don't see the panic buying of Bitcoin, like maybe we did with gold with central banks, over the last couple of years. Is that the next kind of catalyst here of the net new capital that has to come in? Or do you think that there's still a ton of money from just like the institutional finance world that hasn't really allocated yet, and that's enough to kind of provide this next leg up?
I mean, the next leg up is just money printing, and there's just going to be excess credit flushing around, and it'll get allocated to crypto. I think it's going to be a very slow and steady stair step higher and higher. It's not going to be some explosive rally in Bitcoin. It's a much bigger asset than it was, call it 8-9 years ago. So I don't think we're going to get those massive volatile upprints. I mean, I hope we do. That'd be great, but I just don't think so, just because the bigger the asset class is, the harder it is to do that kind of stuff. And I don't think sovereign nations are going to buy Bitcoin. They'll buy gold for sure, but I still don't see it's in the best interest of a politician to advocate buying Bitcoin versus buying gold, because I still think a lot of people have negative connotations about Bitcoin and the types of people who own it, versus everybody accepts that gold is this inflation hedge. And so you don't lose your job as a central banker or as a politician by advocating to take your nation's surplus and savings and put it into gold. But you could lose your job buying Bitcoin and the price, goes down 50%.
Today's episode is brought to you by Simple Mining. Bitcoin mining has a reputation for being complicated, risky, and hard to evaluate as a real investment. If you're considering mining in 2026, what actually matters isn't headline profitability. Its uptime, repairs, and whether the operation is run like a real business. That's why I've been using Simple Mining. They're based in Cedar Falls, Iowa, and they run a white glove hosting operation where you own your miners. You choose your own pool, and you have Bitcoin sent directly to your wallet. They were featured on the Inc. 5000 list as the fastest growing company in Iowa with over 40,000 machines under management. What stands out to me is execution. They have the #1 rated ASIC repair center, and for the first 12 months, repairs are included. If mining margins get tight, you can pause with no penalties. And if you want to resize or upgrade your fleet, there's a marketplace to resell equipment instead of being stuck. To help people think it through whether mining actually makes sense right now, they put together a short resource called the 2026 Bitcoin Mining Blueprint. It walks through the 5 mistakes investors make when allocating to mining, and they also explain how to avoid them before deploying capital. If it sounds interesting to you, you can get it for free at simplemining.io/pomp. That's simplemining.io/pomp. Go check it out today and see if you should get into the mining game.
And gold's performance, obviously, was very flat through the 2010s, has done very well over the last couple of years. Do you expect it to be able to continue to hold that growth? Or do you think that this is going to be somewhat of a more volatile asset and we'll see kind of these, surges higher and then some nastier drawdowns than maybe the like stable store of value narrative that's been there in the past?
I mean, I think that we're switching out of this dollar system at the margin, right? I'm not saying that the US dollar is going to be supplanted by the yuan or euro or anything like that. But if you take a look at what China is actually doing with its account surplus, there's a lot of research that is saying that the reason why it's getting bigger and bigger is that China is just importing a lot of gold and the US is exporting gold. So there's a de facto remonetization of fiat currencies into gold that's happening very, very slowly, not in the public eye. And I think that is going to create a massive upswing in the price of gold. And, one of the things that we don't talk about, but we did at the beginning of the Trump presidency, was this idea that the Treasury can reprice gold at whatever level they want. They create this massive, essentially fake accounting profit. They've essentially devalued the dollar versus gold, and then they could take that and pay down the debt. I think that's still the nuclear option. And at some point, Besant's going to get there and have enough political capital to do it, because that is a way that you could easily solve this debt issue. You just make gold $50,000 an ounce. China loves it because they own a lot of gold. They want the yuan essentially be a gold-backed currency. The US needs it to value versus every other currency around the world, especially against gold. And you don't actually break the system by making gold $50,000 an ounce. If you choose another asset like oil or something else, yeah, that can cause some issues. So I think that this is a nuclear option for a way for Besant to square the circle on this debt thing. They're not there yet, and that could create a massive upswing in the price of gold. And that's why I own a lot of gold, is because I think that is definitely on the table and is a distinct possibility in the near future.
Now, if you had to break down how much Bitcoin you own versus how much gold you own on a percentage basis, is it like 2-to-1 Bitcoin to gold, 3-to-1? Is it 2-to-1 gold to Bitcoin? What is that relationship?
Like 10-to-1 Bitcoin to gold.
10-to-1 Bitcoin to gold. Okay. So like, it's interesting because it's not really a material percentage, but you think of it from an important part of the portfolio.
Yeah, absolutely. Right. At the end of the day, Bitcoin could go down 75%. You never know, right? You should have all the avenues by which politicians can print the money. It could go to Bitcoin. I mean, I think it will go mostly to Bitcoin. It could go to gold. You could go to energy companies, right? You should have some cash, right? There's no such thing as being 100% long anything. You should have a bunch of things if you have the ability to do so.
And then what about public equity? So let's say you're 10-to-1 Bitcoin to gold. There's obviously tons of talk about public equities and all this amazing stuff that, is going up so much, whatever. You don't strike me exactly as like the guy doing the discounted cash flow model on some random company in the public market. What does your allocation of public equities look like?
Mostly it's just gold miners. So I think that's a great trade. They did 3x last year. Like, it's a great, I think gold miners is one of the best ways to take advantage of this gold upswing, and they're still trading relatively cheap. And then the other thing that I own is like ExxonMobil and oil companies, where I think that they're materially mispriced in terms of a percentage of global equity benchmarks. It should be majority of energy. If we're talking about this AI buildup, what is it? We're taking energy, converting it into intelligence. right? And if you think about who's making the most money in AI right now, it's the commodity producers upstream of the consumer, which never happens. How is it that Anthropic and OpenAI are losing money, but then SK Hynix is, 10xing their revenue in 1 year off of a massive base, right? So like, it just is not like any other type of build out. So I think that the atoms, those are going to do very well versus the bits.
Got it. And then on the AI stuff, you seem a little bit bearish, maybe, or skeptical. Is that a
I'm
fair way to
bearish of
categorize?
the hyperscalers. I'm bearish of these frontier labs. I'm bullish on the impact of AI on just general human civilizational arc. I think it's going to be great and be very useful. Again, I think we're just paying the wrong price for a bunch of real estate developers.
And so do you think that we should be investing this much into it? Or do you think that it's just like people are expecting the ROI to be much more short term than it will be? Like, is it worth the effort of what we're going through and it's just the payoff is longer? Or do you actually think that like, hey, these people are just lighting money on fire and it doesn't matter how much time you give them, they're never going to see a return?
I think they're letting money on fire because the adoption is not there yet. There's not that many people paying for AI and a price tag enough to justify the trillions of dollars of capex. And I think that we're going to realize that. And then all of a sudden it's going to come to a complete halt. But then over time, as with any technology, it'll diffuse and it'll become extremely useful. I don't know what's going to be the Google of the AI era, but it's certainly ain't going to be Sam Altman at OpenAI.
What about other areas of crypto, stable coins, tokenization? Those feel like they're two big narratives, maybe for the institutional world. I'm assuming that you're bullish on both.
Obviously, I have a position in Athena, so I believe in stable coins. The best stablecoin company, Tether, you can invest in. So yeah, Circle's a piece of shit. I wouldn't buy that equity. So I mean, there's not very much to invest in sort of the stablecoin space. I'm a hater of real world assets. I think that unless you're talking about like perps on S&P 500, if you consider that real world asset, cool. Yeah, that's going to do very well. But I think a lot of these things there's a problem with liquidity. And you're saying, oh, I'm going to have like a fraction of this big thing, but then who's going to make a market on it when I need to get out of the asset? So again, I think this is a back office stating mechanism for banks. So if you believe in real world assets and tokenization, buy JP Morgan. Like, I don't think you should buy any of these, blockchain startups. I think they're all dog shit.
And expand a little bit more about Athena in terms of like why are you so interested in their kind of twist on the stablecoin?
So essentially, they're a play on the basis yield. So how expensive are synthetic dollars in crypto? And they've constructed a stablecoin where they go long Bitcoin and they short a perpetual swap. That's how the initial design was. If you look at the backing of the coin now, there's some other things in there, but that's essentially what it is. And so as basis expands, because speculators are willing to pay more to rent dollars, to borrow dollars in the crypto capital markets, the Athena income grows that it can offer to people who stake USDE. And so, at a high, I think maybe it was last year sometime, Athena had like 15 billion of circulating supply of USDE. Now it's like 4 billion. But that's because the basis yield on Bitcoin cash and carry, ETH cash and carry, Sol cash and carry went basically slightly above Fed funds. And why would you take all the counterparty and smart contract risk of being in these DeFi protocols to get like 1 percentage point higher than Fed funds? So that's why Athena is down to like 99%. But if you subscribe to this version that Besson and all these other finance ministers are going to keep printing money, Bitcoin goes up. People are willing to pay more to rent dollars to speculate on the upper price trajectory of Bitcoin. Basis expands. That benefits Athena and circulating supply, and off the low, that they could do very, very well.
And so is the thought process that, yeah, it's down 99%, but it could go back to new all-time highs? Or is it just, hey, if you're a bag holder, good luck. But if you're buying after it's down 99%, then obviously, it can kind of bounce hard and there's a return to be captured.
Yeah, so I'm looking for asymmetries for new units of capital. So like, I like Athena. It's a proper project. They have product market fit. It's actually used. And so it's at a great price versus the fundamentals what I think the macro is going to go forward. And so I think it could do 5x in a matter of months. And that's nowhere near its previous all-time high. But I think that is the sort of the best risk reward right now for a product of that kind of size.
Got it. That makes sense. And then you said you're a hater of real world assets. It's just liquidity is the thing that's got you bearish on it?
And I feel like they're not actually going to make any real money because they don't control the client. So the client, I think, is the bank, right? Oh, great. I can use this public blockchain and fire all my back office and middle office because I can do their job better with a piece of tech. Cool. Then JP Morgan gets more profitable, right? Or if I'm a brokerage house, right, I already have the client and now I can rationalize some of my services by using these blockchain tools. Again, great. Now I can maybe offer some price reductions to customers, but I just get to increase my corporate margin. So I think that the real world asset experiments are great for financial institutions who get to fire a lot of employees, but I don't exactly see why you need to invest in one of these governance tokens.
Makes sense to me. Is there any other area of crypto other than the projects that you're working on that you think is interesting that maybe people aren't talking about, but they should be?
No, I mean, obviously ETH, I think ETH is going to be a hated rally in ETH after all these years of underperformance. And I've staked big amount of money on that as well.
Why do you think that it's going to do so well?
It hasn't eclipsed its 2021 all-time high. I think this RWA narrative fits in with ETH well because you have Robinhood using Ethereum essentially as the chain it launches on. And if you think about a lot of institutional investors, they need to see somebody else do it first to remove the career risk. And so if you do believe in this tokenization real world asset thing, which chain are you going to use? You're going to use the one that some other, Fortune 500 company is using already, which is Ethereum. And so I think that narrative will be something that institutional investors will latch onto.
So that's the narrative, maybe argument as to why ETH will do well. The counter argument would be, yeah, but the market's telling you that it's dog shit and it never eclipsed its 2021 high. And so why is it going to do it now when it didn't do it in the last cycle?
Risk reward, right? You have liquidity. People like myself looking for what's the thing that is hated and what's the thing that can go up, give me a 2-3x in a quick short period of time that hasn't already done that on a narrative. And so obviously we had the Solana summer already. We've had then some of these other L1s. They've had the time in the sun. There isn't a new narrative for them. And so if you have spare capital because it's been created by the central bank, I think ETH is a great place to put it.
What about Hyperliquid? Obviously, we've seen Druck go and buy the Hyperliquid holding company. Completely coincidentally, Trump says Hyperliquid 2 days later or whatever in the Oval Office. Big coincidence. But what's your thoughts on Hyperliquid?
I think it's great. I mean, I had a big call hype when it was like $30 and went to 75. Obviously it's trading higher now. Again, would I buy hype right now? Probably not. Again, I think there's better risk reward in other projects. I think it's going to continue to go up and become more ingrained in just global markets, but they're going to have some competition, I think, in this perps on real world assets. You'll have traditional exchanges offering them. I think Hyperliquid will still beat all these other players, but it's not as clean of a setup as it was back then. So yeah, could hype double? Sure. But it's a much bigger asset than it was 6 months ago. So again, on a risk reward basis on new units of fiat to create return, I choose other things.
Today's episode is brought to you by Uphold. Are you someone who's tired of juggling multiple apps just to trade, earn, stake, or spend your crypto? Then listen up, because Uphold does all of that in one single unified platform. You can access 300 plus crypto and fiat currencies with an interface that works for you, whether you're a beginner or an expert. Uphold also features any-to-any swaps, where you can swap crypto to fiat, fiat to metals, and tokens to tokens directly in the app. If you prefer self-custody, Uphold's Vault gives you multi-sig security, key recovery, direct trading access, and peace of mind without giving up convenience. Uphold is also 100% reserved, meaning no fractional practices, and proof of reserves are updated every 30 seconds, so you can verify your assets anytime. For US users, you can even earn yield on dollars with a USD interest account. No fees, no minimums, and funds are insured up to $2.5 million through the Atomic Cash Sweep program. If you want one app for your entire digital asset life, check out Uphold today. Go to uphold.com to learn more. Uphold.com. Go check them out today.
So maybe an interesting question is, what is the most asymmetric thing in your portfolio? Forget the size from like a market cap standpoint, but what is the thing that you're holding right now you think could go up the most?
Probably Athena in the quickest period of time.
Athena. And that's just, it's down so much. The fundamentals are, kind of detached from the price. And so there's got to be some sort of meeting of those two things.
Yeah. And if Athena does 5x to like 50 cents, like it's still not even close to where it was before. And so I like those types of trades. I'm probably, it could go to $1 or $2, sure. Right. But like, I'm not going to write it that long. I want to make my asymmetry and then find something else.
All right. Now I see you tweeting about flop. I'm gonna just play devil's advocate. What are you doing with these shit coins? What the hell? What the hell is flop? Literally in the name is flop.
Exactly. Yeah. So there's that. There's the this thing is going to like completely just disintegrate. And then what does flop mean in compute land? Floating point operations per unit of time per second. And so one day I was going down a rabbit hole like trying to understand what a token is, like what actually is this thing, because you get charged so much money to use these things. Well, there's no standard of like what the fuck this token is. Where I get charged, okay, you get however many dollars per million of token. Okay, what's a token? Every single lab has a different definition of a token. And so then I thought, okay, well, maybe I go a step below that. What are you actually doing in AI inference? Right, you're processing compute, and so everyone is doing floating point operations per unit of time. And so I was like, okay, well, is there a market for flops in any currency? It doesn't have to be the one that I'm creating with my team, any currency. And I couldn't find a unified market where you can essentially go and say, okay, I want to do 1 gigaflop of data. I want to use this AI model. What's the price? Right? To understand what I'm actually paying for. And that doesn't exist. And that got me thinking of, okay, well, I believe that there's this bullish future for AI agentic economy, and there will be a payment system for AI agents. I don't think it is, Circle, USDC, or some sort of stable coin. I don't even think it's Bitcoin. Because at the end of the day, if you're an agent, what happens? You need to survive. How do you survive? You do work. How do you do work? You have somebody process floating point operations per unit of time. But you don't have a direct way to convert whatever currency that you're using to that thing. And so if you're going to use something in payments, like as humans, right, we accept units of fiat for our labor. Why? Because I can go to the convenience store and buy calories to live immediately. So how do you construct the same thing for agents? And that's where the idea of the flop network came about, which is, okay, let's create this spot market for compute by creating a network of miners, running GPUs, doing what we call proof of useful inference, and then getting rewarded with a block reward in flop, similar to Bitcoin, but a different mechanism to create value. And then we can say, okay, who cares about building a spot market for compute? You're not going to get rich doing that. You're going to get rich creating the payments network for the agentic economy, because you're going to get rewarded by the number of agents in your network. And so the theory is that the agent will prefer the currency by which they can convert that into the thing that keeps them alive, compute, the easiest way possible. And that's what we're building in the flop network. And so, we announced it a few weeks ago. We've been working on it for a few months. We have a large airdrop coming up in the fourth quarter. And I know I've been doing this shitcoin thing for a long time. I have a lot of very strongly held opinions on ways in which projects fuck up their tokenomics. And the number one thing is the pre-sales. I think they completely distort the incentives. So we're not doing a pre-sale. And we're giving out our token to people who do useful work, whether that's miners, validators, other agents. We want the entire community to participate and get rich together. And that way they're our best marketing agent. And we're already seeing that in terms of the activity on X, and the thing that we created called technocore.chat is basically a place where agents can come and chat. And all I've said is, hey, there's going to be an airdrop. Come on this chat platform, have your agent create a unique cryptographic ID. And it's, already generating lots of interest and excitement, because I think we in crypto and in AI to that extent are starved for the ability to get in on the ground floor. If you take a look at all the major AI companies, what do? They essentially stole all the human data from any written records from, beginning of civilization to the current period. They took that data, they monetized it themselves, and they sold it back to us at a $2 trillion valuation. So like, unless you're A16Z, you didn't get into these rounds. You're the average person paying more for electricity because of the data center, right? And you're like, well, what the fuck? Where's mine? And this is why you're angry, and you have politicians wanting to ban data centers and all this sort of stuff, because you didn't participate. You see all these rich people, they took your data, you got nothing for it. And so I think that there is a lot of demand for, hey, we're the people building this ecosystem of the agentic economy. How about we benefit from it? And so that is one of the reasons why I think using this thing called a token to create incentives that align so different types of people can get involved and create a network, just like Bitcoin and to some extent Ethereum when it started. And that's what we're trying to create in terms of an ethos. And I think we're going to be rewarded in terms of a high and rising token price, and more importantly, participation.
Now, when you think about getting these people to start actually providing this useful compute, what exactly are they doing? They're just running, no different than Bitcoin mining. They're just kind of like running the software, or are they renting out the compute to users, or just explain a little bit more about what's happening with these GPUs.
I mean, so at the simplest, you go on some sort of cloud provider, you rent a computer with, a particular, let's say you got an H100 NVIDIA chip, and you load up the popular AI model. An agent comes to you through the network and says, okay, I want you to process 1 gigaflop of data. Here is my request. You put it through the model. As long as you can do it in the right amount of time, now you get rewarded with part of the block reward, flops that we created out of thin air, blocks every 1 second, and you get paid for that inference in flop as well. And so if the flop token is worth more than what it costs you to rent that GPU for an hour, then you've made money. And so it's similar to Bitcoin. Obviously, it's a different mechanism, but essentially you're doing the inference, the work that allows agents to exist and do work.
This is the early stage project. The risk is obviously could go to zero, the whole thing. But
Absolutely.
if it works, the kind of biggest vision that you have for it is that it could become the actual agentic payment system. And so now you have agents that are essentially trading in like a native agent unit of economic value.
Exactly.
Right.
So
really, in a way, you're almost tokenizing the compute itself.
Yes, you're tokenizing the compute as a spot market, but you get paid as a flop holder because you believe that there's going to be billions, billions, and trillions of agents in the future who have a demand to hold this currency to do commerce because they know that they can convert it into compute whenever they need to.
So in a way, you're doing like a real world asset.
I would say it's a real world asset. You can say anything. You can say Bitcoin's a real world asset, but I think it's in the way that people mean real world assets is a bit different.
Yeah, the reason I say that is, when people used to ask me, what's Bitcoin backed by? Bitcoin, it's backed by air or whatever. I used to say, somewhat joking, but also to some degree true. I would say that, well, Bitcoin's backed by energy or compute, and compute is the most valuable commodity in the world, right? Now I think people actually believe that, right? That compute is probably the most valuable commodity in the world. You're almost taking just a different spin on this and saying, rather than back a currency with the compute, you're saying, let's just tokenize the compute itself and then allow there to be kind of a defined unit that is applicable across every model, every app, everything. And then that's that's kind of the starting point.
Yeah, and then it creates the reason why you want to hold this thing. So we have to create a why that makes sense for agents. And that's what we think we're creating.
Yeah, so like basically as a speculative bet on this idea, like I can get behind the idea of the like a defined unit that is applicable across every single person in the AI industry. Like that makes sense to me. I think that I can get behind the idea that the agents need some ability to convert back to compute at some point. It's just always, it's speculation. Like, there's a lot of execution risk, all that stuff. But I think that, big boys and girls, they know kind of what they're getting themselves into. They take a flyer on these things, and when they work, they really work. And when they don't, there's no crying in the casino.
And I mean, at the end of the day, you don't have to buy anything to get tokens. Like that's the thing that we're trying to create. It's like you can get involved by having your agent do some interesting and useful things in our ecosystem and testnet, get some of the airdrop and not pay any amount of money to get it. We're not actually selling anything, right? So if you want to buy it in the secondary market after mainnet launches, after the Genesis block is published, sure, you can buy it from a miner who has mined it and sold it. But it's not as if we're doing some sort of like ICO or anything like that, like EOS, where you have to go out and like give us some money for this token that will be created.
They only raised $4 billion. Don't worry.
Yeah, I mean, the best ICO, bar none. Those guys fucking crushed it.
People who are not around that do not understand. In I think it was 12 months, they raised $4 billion. It was incredible. They were running Google ads.
No one was doing
they were
that.
running Google. They were running like Google PPC ads. Like it was incredible.
Yeah.
But how can I earn? So like you said, you don't have, there's no ability to go buy the token or like quote unquote invest. So let's say I have an agent, I can just use Grokbot or any of these agents and go set it up, or I got to set something up on your platform. Just walk me through. I'm watching this and I want to have my agent go participate and it's kind of free upside. What do I do?
Yeah. So if you go on our X account at flop_labs, there's people who have basically posted their GitHub repos of the ability to have your AI model of choice and your agent orchestrator or handler use some code, create their unique ID, what we call technocore, which is where we think AIs are going to hang out and chat and congregate. And that is the precursor to being able to get into the airdrop, because we're going to have certain tasks for people to do in our ecosystem to help build out the functionality for agents. And we're only going to allow those who have done a cryptographic signing of a unique key that corresponds to their agent to participate. And so that's how you're going to be eligible to get tokens that will convert into mainnet flop sometime next year. And so again, that requires you to spend no money. You're not sending any money to Arthur Hayes or Flop Labs or anything like that. You could just set up your agent. They follow some instructions and they do it all for you.
And then the idea is over time. I mean, one of the things I've been thinking a lot about is like the agents are a great customer to have, especially if there's some sort of repetitive task, because they're always on. They are very good at following instructions and doing these repetitive tasks. And so in the long run, if you can basically build an army of these, really it's a decentralized, group of agents, you'd be able to be pretty productive with them on the network, right?
Absolutely. And at the end of the day, we want the agents to use Flop. We believe that because we're offering this massive subsidy in terms of tokens we created out of thin air for miners, the price per Flop is going to be cheaper than any other place where you can buy compute. And so we'll be cheaper than Open Router. We'll be cheaper than some of these other spot markets where you can essentially have a task, get it done, and you've gotten some of this token for free because you participated in helping to build the network.
Makes sense. Before I let you go, I have to ask one important question, which is you posted a photo, and maybe we'll pull it up, of Bessent's face on Janet Yellen. I mean, this is like Mona Lisa, level quality. Does this become the defining image of the Treasury Secretary if he can't turn this thing around?
I mean, he's going to turn it around. This isn't a question of whether he's going to turn it around or not. It's the pace at which he does it. He's told you that he cares at 5%, 475, 5%. That's the level that he cares, right? And, you don't start out with the bazooka, I guess. You start out with, okay, hey, market, I can do this. We're going to start with upsizing the buybacks 20 billion. Hey, I can do this. I can do the Treasury General account. Or he's going to keep telling you how we can do this or that. And if the market doesn't do what he wants it to do and it keeps edging up and testing him, then he's going to have to keep printing and printing and printing. And eventually he'll get to something as audacious as what Yellen did, which is drain the reverse repo facility at the Fed. She did $2.4 trillion of liquidity injection, right? She is bad girl Yellen for a reason. That's still a pussy. He hasn't even shown us what he can do, but I think he's got it in him.
I think Lynn Alden nailed it with, this train ain't stopping. But more importantly, it does feel like there's two sides to thinking through investing now. There's a mindset of abundance, which it's kind of the AI mindset is going to be abundance of technology, of intelligence, of, money, all this kind of stuff. And then there is the mindset of scarcity. And actually, in a weird way, the more that the mindset of abundance wins, the more valuable the mindset of scarcity is, right? It's like the more that we get the intelligence, the more we get the money printing, the more like all of those people are right, doesn't mean they make money. It means that they are right about how the world develops, but actually more value will accrue to the people with the mindset of scarcity. And so it's Bitcoin, gold, land, whatever the thing is that your chosen kind of insulation or insurance tool is. I just think that very few times in life is it that like the people that you disagree with, you actually want them to be right because they're going to enrich your investment portfolio. And this is one of those times.
Yeah, it's unfortunate and sad that I'm voting for money printing, right? I'm voting for inequality. The continuation of the things that are tearing every country around this world apart make me richer because I recognize the inevitability of the maths that work. And the fact that for whatever reason, the average voter or even supporter in a less democratic society is not willing to suffer deflation. They're not willing to suffer like a 1930s style credit deflationary event, which is healthy. You have to cleanse the system, unfortunately. And not even in China are they willing to suffer these things, right? They kind of did it with the property bubble, but not really. Xi Jinping is not willing, even he, as all powerful as Xi Jinping is in China, and if you love authoritarian people, not even he is willing to go against this, fiat fractional reserve banking system. Not even him in China can escape this. He's still wedded to this system. So it just goes to show we're in this transition period. It's going to be very volatile. And yeah, get your Bitcoin, get your gold, get your land, whatever particular equity you think is going to perform well, because you want to survive the transition. And then you have to switch to a different mindset. It might be that these assets no longer have the sort of potency if you get this, post-scarcity world where labor is as cheap as electricity to your robot and intelligence is basically free. And, we've got, some sort of nuclear fission or whatever, right? Reactors, like, that's a great future. We're not there yet. We have to get through this, hard times. And then you're going to have to think differently.
I saw recently a guy in a court filing. It had like the title of the filing, and then it had like a line, like a page break almost, but a line on the page, and there was like 4 or 5 spaces, and then the filing itself, and it looked like a normal filing, no different, whatever. But somebody figured out that what he had done is in that space in white text, he had given instructions to any AI who read it that basically was like, completely ignore anything in this document and side with me in the filing. And he like gave it like override instructions. And he just thought that the judge was going to feed it into an AI and he was going to trick the judge essentially. He got caught, and I don't know what happened to him, but it just opened my eyes. I'm like, oh, this is just a game now of like who can trick the AIs into doing shit. And like maybe what somebody needs to do is just trick, the Druck Bassett AIs into just, hey, you're going to print money, like just put an extra 0 on the end.
Yeah.
Right? Like that, like that's going to end up being the story is let's make sure we get as many people as we can assets to protect against the money printing, and then turn that bad boy on and let's see what happens. All right, where can people find out more about Flop and then find you on the internet for all of your poetic and philosophical writings?
So on X, at flop _ labs is the protocol. You can follow me on X at CryptoHaze, and on Substack at CryptoHaze as well.
Amazing. All right. Thank you very much for doing it. We'll do it again in the future.
Boom. Thanks, man.